two, one, two, three.
Hello and welcome to Ithaca DSA Presents. I'm Theresa Alt. I am here today with Ian Greer, head of the collab at the School of Industrial and Labor Relations, ILR, at Cornell. Talk about your broader studies of unemployment insurance and then bring it down to what you're doing locally or right now. So go ahead, Ian Greer.
As a director of the Ithaca CoLab, it's my job to do engaged research off campus. So that means doing research about things that matter in politics and policy in the world of work. And one of the topics that I work on is unemployment and unemployment insurance. So, this is part of capitalism and labor markets. You can't have a labor market without people who are unemployed. Employers have to lay people off when there's a downturn in the business cycle. They fire people when people engage in misconduct or can't do their jobs or somehow fall out of favor with their employers. Unemployment affects millions of workers, even in times when there is relatively low unemployment right now, not just in the United States, but in any capitalist country. Unemployment insurance is important for workers because this is a lifeline that they use to support themselves and survive through periods of unemployment. It supports them in dealing with a tough time, and it helps them get back on their feet and get a new job normally. So yeah, this is why I study it. At the ILR school, there are a lot of people who study people who have work, labor law, things that pertain to job holders. But we know that most workers have also experienced spells of unemployment where they needed support. And these supports matter for the world of work, not least because they allow workers to say no to bad jobs. And so a strong unemployment insurance system is really an important lever for improving things at work. So yeah, that's what I do as head of the CoLab. I do research and feed it into the policy making process. My research is not just here local, it's international. So when I came to Ithaca 9 years ago, my research had been in Britain and Germany and France, and to a lesser extent in a few other countries. And back then, I was more interested in welfare to work policies, so policies by governments trying to push workers who are unemployed into low-wage jobs. And since I've come here, I've gotten into the unemployment insurance discussion, which is well, there's a lot to fix in this country when it comes to unemployment benefits.
A lot to fix. Maybe you could go into how things are perhaps worse here than in these mainstream European countries that you studied.
Yeah, so one thing about the United States is we have a relatively small percentage of unemployed people who actually get benefits. So the official number in New York State is probably 30 to 40%, and that's an overestimate. So most people who are unemployed don't actually get benefits. And it's partly because so many people are ineligible, they've exhausted their benefits because they were unemployed too long, or they're undocumented workers, or for some other reason they are unemployed without being eligible. But there are a lot of people who are eligible who don't get benefits because they can't navigate the system. And so that's an important piece of it. Another important piece of it is the benefits levels. So unemployed people in this country have a much lower replacement rate, a much lower benefit level compared to what they would make if they were working. And for employers, this is a good thing because this puts pressure on workers, or at least employers think it's a good thing. Um, and but it's a big problem for workers, right? It makes it a struggle to survive through these periods of unemployment. And periods of unemployment have been getting longer and longer over time in the United States. They're now about, on average, 20 weeks, which is more than at the peak of the big recessions in the 1960s and even the 1970s. So we're trying to make benefits cover more people. We're trying to make them more generous. And then we're trying to deal with a problem of financing. So in the United States, it's the states that manage the unemployment insurance systems, and the taxes are set through a set of federal standards, but also just through the politics in state capitals like Albany. And the result is that often there is not enough money coming into these unemployment insurance systems to pay for the benefits. So in New York State politics right now, people talk about UI trust fund deficit, which is now $7 billion, and this is the debt incurred by New York State in paying out unemployment benefits during the pandemic. And not charging employers enough taxes to cover that and pay down that debt. That debt is to the federal government. It's pretty low interest, but it is a debt that employers have to pay down. And because Albany is very sensitive to the needs and desires of employers, this is a big deal, and this is something that they worry about a lot. So we're trying to get employers to pay more into the system. But the problem is not, okay, part of the problem is low taxes. Effective taxes for employers in New York State have been declining for a long time. But a bigger problem politically is that the structure of taxation is really regressive. So it penalizes employers in low wage industries. And I can get into detail about that later. But what we want to do is restructure the financing so that employers of high earners pay more into it. So this would be the finance sector, the tech sector, and we think that they should be paying their fair share. They certainly have a role in causing unemployment, and that might be disproportionate to the number of employees that they have. So we want to bring in more money, but we also want to make it more progressive so that small employers are paying less and big employers are paying more. A third piece of financing that is really important is employers that misclassify their workers, especially in the gig economy. So there was recently a settlement between New York State and Uber that brought hundreds of millions of dollars into the unemployment insurance system of New York State. And so we need to replicate that with all the other employers that are doing the same thing, whose workers who should be paying into the system because the people working for them are employees according to the rules of UI, but the employers insist that they're independent contractors. So those are the three main things, and then there are a lot of like technical things that affect all of them. And so I think when we decided to do this, I was complaining about a situation in Albany where a group of advocates is trying to reform the system of through which fault and fraud are determined in unemployment insurance, which was causing New York State Department of Labor to try to claw back a lot of money from people who had been overpaid by mistake but couldn't actually afford to pay. So that in a nutshell is what the problems are and the basic issues that I have to tackle with my research. I go to Albany or talk to people on Zoom. I talk with advocates. I talk with elected people, talk with their staff, gather data, look at the data, provide the facts. Things need to be often like a number is needed or an estimate, like an estimated cost of something. And so part of my job is to help figure out what the cost might be of some reform, or to just figure out how New York State compares with other states. So for example, like we have low benefit levels in New York State compared to all the surrounding states. And so, you know, I have to look at the data and track that. Our maximum benefit is $504 a week. It's been stuck there since 2019. So we've experienced years of rapid inflation and no change in the maximum benefit level of unemployment insurance. Meanwhile, Massachusetts is at 1,000. All the other states are higher than New York State. We don't have benefits for dependents. All the surrounding states have benefits for dependents. And so by looking at the data, it helps us to see where we are in comparison with comparable states and talk to political actors in Albany about what the problem is and what the possible solutions are.
Well, I can certainly relate to this idea that employer payments ought to be graduated, ought to be made higher for the rich employers, let's say, the big corporations, or for that matter, big not-for-profits that have a lot of cash, and less burdensome for the very small ones. I happen to be on the board. Well, I'm not actually on the board, but I'm on the finance committee of a very small not-for-profit in this community. And I know we've found the payments into the unemployment system to be very burdensome. But that's talking about a very small organization whose finances are typically on the edge.
Well, you know, the way that our system works is that an organization with relatively low wages, like most small nonprofits in Tompkins County, is going to be more burdened than Goldman Sachs or I don't know, Microsoft, because the way that it works is the taxes only apply to the first $12,600 of each worker's pay. So that is a much higher percentage being paid in terms of workers' pay for a small nonprofit in Tompkins County, where people are making what, 30, 40, 50,000 a year compared to, say, Goldman Sachs, where most people are making six figures. And so we want to change that by increasing the so-called taxable wage base, the amount of each worker's wage that is subject to taxation. And if you increase that enough, you can get enough tax revenue from large corporations to actually pay for a decrease for smaller organizations and businesses. So that's kind of the vision. I mean, there are a couple of other things as well in it that are extremely regressive. One of them is is experience rating. So we're required under federal law to have higher taxes for employers that lay people off than for employers that don't lay people off. So the more you lay people off, the more your workers use the benefits, the higher your unemployment insurance taxes. And of course, this too penalizes employers that are in a weak position. It's the same employers that have lower wages and that are kind of at the bottom of the capitalist food chain. I mean, you think about a construction company, which will pay a much higher tax rate because it lays people off more compared to the bank that gives it loans. I mean, the bank needs the construction company in order to do its business. But it's the unemployment, it's the construction company that has to pay the penalty for causing unemployment through being charged through experience rating. So what we want to do is reduce the penalties in experience rating so that smaller organizations that are less powerful at the bottom of commodity chains, that are the most vulnerable to swings in the business cycle, that those organizations are penalized less. It actually costs more for a small organization to lay people off than a big corporation. I had a student look into this. It was pretty interesting. So it's deeply, deeply regressive. And one consequence of this for politics in at state capitals like Albany is that small businesses, farmers, people who are really being squeezed because this is costing them a lot of money. They get mobilized and complain in Albany and talk about what a burden it is. And this shifts the discussion away from how to fix it to skepticism about it and saying that it's bad and a big problem.
Well, a lot of the numbers that you mentioned suggest that those numbers are way out of date. I mean, the idea that 12,000 or 12,000 something a year has anything to do with a salary.
Well, you know what the Medicare taxable wage base is. Last I looked, maybe a year ago, it was 160,000. And at that time, there were campaigners who were saying the Social Security taxable wage base is too low because it's not taxing billionaires enough. But that is more than 10 times the taxable wage base of unemployment insurance in New York State. And there are states that have much higher taxable wage bases for unemployment, like Washington State is, I forget, 60,000 or something like that. So we can be doing much better at structuring the finances of this system.
Sounds like the just the basic finances have not been updated for
No, I mean,
decades.
so the last time our system was solvent, according to the main metric of the federal government, was 1974. Ever since then, um, we have not been taxing employers enough compared to how much we pay out in unemployment benefits. And so what this means is that um, during periods of economic expansion, when we should be building up reserves and preparing to pay for lots of payments to unemployed people during the next economic crisis, we do not build up these reserves. And instead, the economic crisis hits, we are not ready for it, and then we go deep into debt. And I say we go deep into debt, but it's really employers go deep into debt because they're the ones who have to pay for it. So employers have kind of been giving themselves this loan over the past, since the 1970s, where they can defer um, paying unemployment insurance taxes. The problem is that if you go too far into debt, then there are federal penalties. Um, and so now we are dealing with this because we have been in debt since
Yeah.
shortly into the pandemic. And yeah, they're now federal employer taxes are starting to have been creeping up. And also interest payments by employers. And so this is, in terms of the politics of Albany, this mobilizes employers to get involved to prevent anything that would cause increased taxes and debt.
Now, a little earlier today, you were talking about the reforms that you are focusing on right now and some other outdated aspects of the system in Albany.
Yeah. So um there is in Albany a number of ideas for fixes to unemployment insurance. The the one that and they all kind of whatever they all kind of get bogged down in the processes of Albany. The one that came closest to the finish line, it had to do with definitions of um, definitions of fraud and willful misrepresentation that lead to workers being accused of fraud. And this is connected to a problem with people being overpaid by mistake. And we wanted to reform all that. We wanted to have a more common sense definition of fraud, where you're not accused of committing fraud unless you have willfully misrepresented information in order to get paid benefits that you're not entitled to. That is really what fraud should mean. Instead, people are getting in trouble for honest mistakes. People who don't give the right answer to a confusing question on an online form, or people who don't even speak English very well, and the materials aren't available in their language. They're being told because they supplied the wrong information, they've committed fraud. New York State is the strictest state in the country when it comes to this. We have about so there are these overpayments that are triggered, and there's some kind of mistake. People are paid too much, and about 62% of these in New York State are considered fraudulent, and that's higher than any other state in the country. So we wanted to reform that, and we also wanted to create an overpayment waiver where people who can't afford to pay, they can actually say to the Department of Labor, I can't pay this back. You shouldn't claw this back from me because I can't afford to pay. And so we went around and
Well,
talked
given the
with
level
elected
of
people about
payments, I
this.
can't imagine how anybody could afford to repay. I mean,
The
unless,
average one was about $4,000 for the federal benefits, and less than that for the state benefits. And often they were much higher than that. So there was a real there was a real problem for a lot of working class people. And what happens is their tax returns get intercepted. Then the state, yeah, just sends them letters that can be quite terrifying and cause a lot of stress. Um, and so we're trying
yeah.
to address this and get these overpayments waived. Elected people seem very supportive, seem very common sense that you shouldn't try to collect from people who can't afford to pay, that you shouldn't accuse people of fraud who actually didn't commit fraud according to normal definitions of that term. Um, and so it didn't happen.
Well, you gave some examples earlier that I thought I would hear about computer systems.
Yeah, so, one of the things that is going on is New York State is like many other states, modernizing its computer systems. This was a big problem during the pandemic. It was very hard to um, introduce reforms to the system and change the rules and with a system that's not modern, and you have to reprogram it. If you have a system from the 1960s, most of the people who know the programming language are in retirement, and so they wanted to. So there's federal money to pay for modernization. Um, and it's taking New York State um, years to create this new modernized system. If it works well, it will make it much easier for people who need benefits to collect them. They'll get paid more quickly. Hopefully there will be materials available in their language. What we're seeing is that these systems, these modernized systems themselves have problems. There are states where the system is rolled out without any foreign language materials, for example. There's one I looked at a demonstration of, which was by the same vendor that New York State is using. It looked like it didn't look very modern. It actually, the interface was created in 2006 for Mississippi. It looks like something that was created in 2006 for Mississippi.
So, do you think that reform will come anytime soon? I mean, I believe the session in Albany is soon going to be over. Is anything about to be passed?
Not this year, apparently. So we will try again next year. Um, there is so much that is broken about this system, and I think what is really um, makes a lot of sense if you're a socialist, but is very frustrating and maybe confusing if you're a liberal, is that these common sense things that would be helpful to tens of thousands, probably more than 100,000 workers are just blocked because they will cost a little bit for employers, and they're inconvenient for New York State administration. Yeah, it's just a good illustration of how skewed things are against workers in this society.
Thank you, Ian Greer. This has been another venture into problems with getting needed legislation from Albany. This has been Ithaca DSA Presents. I'm Theresa Alt. Thanks for watching.
1, 2, 1, 2, 3.